Swoosh LLC is educational firm that empowers traders with complete and detailed system to become profitable traders. Melissa Armo graduated magna cum laude from Gettysburg College with a BA in philosophy and a minor in Latin and political science in 1994. She was employed for several banks and brokers in Pennsylvania, Florida, Arizona, and New York as a mortgage broker for several years. She changed careers from banking to pursue a securities trading career in 2008. Self taught day trader with over 10 years of experience, Melissa's specialty is a trading strategy that focuses on shorting stocks that gap. Melissa also appears frequently on TV as a stock market expert. Watch Melissa on RT America, Cheddar TV, CBS, Fox News, and Fox Business Network. Okay, Melissa, you have until 5 minutes before the hour, and I will be sitting here with rapt attention.
Wonderful. I don't know if I can see the chat questions from people. If you have it set up for me to see any questions, or if Kate can do that. I just don't want
Hey,
to miss.
Kate, do you know how to set that up? I think you
We
just
have the, yeah,
go
we
to the
have,
bottom of the your screen and hover over the bottom command bar, and you'll see chat. Just click on that.
There, I just said hi. Does it work?
Yeah, it did. I just got a hi from New York.
Wonderful. Thanks so much. Wonderful to be here today. Gorgeous day here in New York City. Could not ask for more perfect weather, and I'm going to enjoy every second of it until the winter starts. So, beautiful start to fall day and a very good day to trade. In fact, I had time to put today's trading, which I'm going to talk about. And today we're going to talk about trading the side of institutional money and gaps. We are just getting into the beginning of fall, the fall period, which will be a very busy time to trade. Why? Number one, we have a big Fed meeting next week. Everyone's talking about it, where the expectation is that the Fed is going to lower rates. That's going to create momentum in the market. And then earnings season. For the fall earnings season begins later in October, and that's going to be a busy time to trade. So if you've been trading for a long time, you know that typically fall is a very good time to trade. People like to get in, they like to take positions, and again, we focus on earnings. So we're going to talk about that too. So welcome everyone. If you have any questions, again, as John said, I appear on TV and every major news network. And it's very interesting because we often talk about the economy, but the economy and the stock market do not always go hand in hand. You will have bad economic data and the market rally, and vice versa. So again, we have some economic data out this week too, Wednesday, Thursday, Friday, before the Fed meeting next week as well. If you have questions, you can email me at melissa@theswoosh.com, or you can call me at 929-3200-GAP. I do answer the phone, or if I don't answer the phone, you can leave a voicemail. I will call you back. I'm a real person. I live in New York. And I trade. So again, I trade in New York hours, which is Eastern time. The market opens at 9:30. I run a live trading room that opens at 9, and we trade usually between 9:30, 10 a.m., sometimes a little bit later. But like I said, fall is coming. It's a huge time to trade, and it's very busy. And you really want to hit the ground running. You don't want to waste a lot of time during this busy period, because if you know what to do, you can capitalize on it, capitalize on the moves and the momentum in the market when things are happening, rather than just chasing your tail. And again, a lot of people are, just coming back from the summer vacations, getting the kids back at school, this thing, that thing, the other thing, and trying to get back in the groove. You don't want to waste any time. Okay, like I said, next week is a Fed meeting. Tonight's a big earnings. Oracle's out tonight. If we have time, we'll look at this when we're done. I don't know if we will. But Oracle is a big stock. It's going to move the market. Oracle is going to report earnings, and it's going to gap. And again, where is it going to gap? I don't know. I don't predict gaps occurring before they gap. I predict the move a stock will make after it gaps. Okay, and we'll talk about that a little bit too. So I might be doing Oracle tomorrow, but I don't know what direction. Okay, why? Because the earnings hasn't come out yet. So again, we were talking about taking advantage of moves in the market. Why? Because we want to make money. I mean, that's the whole reason we trade. Yes, it's fun to work from home, and it's fun to talk to other traders and come to webinars like the event today. But the fact is that really having money, having extra money, really means financial freedom. Okay, and that, what does that mean? It means peace of mind. It's great to buy nice things, but really in today's environment, we're still in an inflationary period, in my opinion. If you go back and rewind 5 years ago, even 3 years ago, I think the cost of almost every single thing, it has gone up. Okay, and again, that's another point of contention for people that like to talk about the economy. Are we going to go into recession? Is the Fed going to be backtracking and behind in lowering rates? Many people think the Fed's already behind in lowering rates. So really, having more money means peace of mind. So I put the stats in here so far for year to date. Let me just move this here. Year to date, 871,421. This is actually only through 8/28. I was off last week for the Labor Day holiday. I have to update this, and again, I have today's trade in here, but I risk an average of $4,000 a trade. So again, through 8/28, trades in the room, 207 this year, 125 winners, 80 losers, 2 break even, 61% win ratio with an average risk of $4,000 a trade. So again, these are day trades. These are trades I did on margin. In other words, if I short the stock, I have to have a margin account to do it. You can open up a margin account with 4-to-1 margin or 2-to-1 margin. There's all types of accounts out there for people to trade, or if you want to do options. Now I do options too. Again, here are my stats for options. I risk more. So 2025 year to date, again, this isn't through the last week either, over $3 million for the year with options. And again, I'm risking around 8,000. Now, why am I risking more with options? Because I want to do more expensive trades. I want to hold them overnight. Some of the trades we've done could be as much as $20 for one contract, which is $2 grand. Now, if you don't have a margin account, or you have a retirement account and you can't trade on margin at all, because you can't trade on margin retirement account, you can open up a cash account and you can trade gaps with options. And again, we're going to talk about some options trades in here too. So 65% win ratio for options year to date. And again, my profits are more because I'm risking more. You could risk the same, you could risk less, you could risk more. Okay, and I started trading at the end of 2008, but I really didn't figure out my system till 3 years into it. But overall, I've been trading for quite a long time now. And again, the longer I do it, the better I'm getting. And each year, I've kind of bumped my risk up a little bit year over year. So 3.8 and change so far year to date. We'll see where we are. We got 3.5 months left, a little bit more, and going into a very busy period. So I'm optimistic about the end of the year. If you're someone that's not doing well this year, if you're not having a good year, you still have time to pull it around. What if you are having a good year? You know, I've talked to a lot of people are going long this year. The irony is I'm not. Most of the trades in these stats, most of the trades I've done are shorts, and we're going to talk about why I like to short. And specifically, I found that a lot of retail traders want to go with the trend. That's all well and good until the trend goes against you. So again, what if the trend goes against you and you've been going long every dip or buying every pullback all year? What if the next 3.5 months the market sells off? What are you going to do? You could literally give back all the profits if you're up for the year in the next 3 months that you made in the first beginning part of the year, just in 3 months. You could give back everything you made for 9 months in 1 month, in a week, if you're going the wrong direction. And again, the very most important thing is taking a stock in the right direction. And this sounds very basic, but the fact is you can't make money in something if you're in the direction wrong. You're going to lose, okay? So you've got to figure out what direction is it going to be going, okay? And anybody has any questions, I'll see it as we go along. So how can you make your dream becoming a successful trader come true? You have to be consistent. Okay, so ever since I started trading, I got into gaps. And the reason I got into gaps was because they have big moves. And we're going to talk about some of these trades, but that's how I'm able to get some of these numbers, because I'm looking for the large move. I was talking earlier about Oracle again. Oracle's out tonight. I have no idea if I'm going to trade it, or if I'm going to, which direction I'm going to trade it, but I feel very confident that it's going to have a big move, okay? So again, you just add an extra zero, add an extra number onto something that has a big move, whether you take a beginner risk, a medium risk, a large advanced trader risk, you get more out of it, okay? Now here was today's play of the day that we did in the room. I'm going to go over it here. We shorted NVIDIA. We shorted it. Actually, this is still down. This is still falling. This is still red in the day. So we shorted NVIDIA. Again, this isn't a trade that we did on margin, okay? So you could have done a put. You could have bought the closest strike of a put if you didn't have a margin account. We shorted it at 168.60, okay? My average risk, again, in my day trades around 4,000, 4,200. I added at 168, did an add. Again, average price was 168.30, 7,000 shares, exited 167, got the drop. Again, I'm going to show you the 1 minute here. I traded the 1 minute chart, made $9,100. This is a beautiful trade. Again, NVIDIA is a high flyer. It had tons and tons of volume today. NVIDIA today, and probably still even now, has more volume than the overall market. When I talk about the market, I mean the QQQs or the SPY ETFs. So we shorted it, we got in, got the rally, added, got the drop, boom, got out. Again, nice trade here in NVIDIA. This was a short. So I do the same thing every day, but I do different stocks every day. So that's another thing I've found talking to people. Sometimes people call me or they're emailing me or they're interested in what I do. They're doing like futures, or they're doing Apple every day, or they're doing the Qs every day, or they're doing Tesla every day. They're trading the same stock in 2 different directions of the same day, or they're looking at just 2 or 3 stocks. I'm looking at tons and tons and tons of things every day because I don't know what I'm going to do, because I don't know what's going to be a good gap. Does that make sense? So the consistency in what I do is looking for the same criteria to determine the directional bias. And what determines that for me, I'm going to go back to the daily here in NVIDIA, is I'm looking for who is actually in control. Again, who is in control, the bulls or the bears, okay? Who controls the overall market? Who controls stocks? Big money, okay? So I say institutional money. Again, you could say hedge funds. You can say large professional traders. Banks have trading desks. It's big positions in stocks or the overall market that move stocks. And again, they buy stocks or they sell stocks. Again, or they short. So what is the reason I prefer to short? Because you get fast moves. You get big moves in shorts. And I found that shorting gives me a niche. And again, like I used the example, say from January till now, for the first 8 months of the year, you could be up going long every dip, even though you would have lost in a period when the market sold off when we had the tariff business back at late March, early April. If you were buying every dip, even if you're up, if we sell off here, you could lose everything you made in 8 months like that. And that's why I don't trend trade, okay? So again, I'm in, I'm out. I'm getting the move, I'm getting out. Even when I'm doing options, okay? I'm trading momentum, so I'm taking it, getting in, getting out, getting the move, okay? Any questions here so far? So one of the biggest trades I did in the last month, this was back in August, was another favorite that everybody loves, another favorite that really actually also can be affected by the market, was PLTR, and we're going to go over it. So again, how did I determine the direction that the stock would go in anything I see, anything I do? Like I was talking about Oracle for tonight. I have a rating system where I rate the gap. I figure it all out in the morning, or even Oracle, for example, I could do it tonight. As soon as I see the gap, I figure it out, okay? Now, here was the one that we did here. This was PLTR. Actually, I'm going to go back. I'll show you the trade first. So on 8/14, we did the PLTR 180 puts that expired on the 22nd. So let's go to 8/14. Take it up. So again, here. So we did the 180s, okay? So a put is a short. So basically, I'm buying the put, getting the drop, and then I am selling it to get out. Now, again, you have to check where you have a trading account or how you have it set up, but you can trade options on a cash account. You should be able to trade options in a retirement account too. You have to check with your broker how you have it set up. But this, again, fell. And again, this is a gap. So what is a gap? A gap is the difference between the close and the open. So PLTR closed here one day, and then gap down here in a different day at a different price. So I looked at this gap, I examined it, went through my process, and said, you know what, this is going to fall. And we shorted it. So again, we did a put. So here was the trade. And sometimes I do them away from the strike, sometimes I do them at the money. But this was really cheap for the move that it went and where it did. It was $3.25. So 30 contracts is a risk of $97.50, sold at $35. I got out of it on the 20th. I'll go back and show you that. It was almost 1,000% return on investment. Huge trade, $95,250. And again, what if you had a beginner risk, or you just risked around 1,000, 1,300, 4 contracts, you could have made $12,700. These are just huge calls that sometimes they could be, spark something like news. Sometimes it could be a sell-off based on earnings. Sometimes it could go with the market, okay? So let's go back and look at, again, the daily. Again, panic comes in. Get the drop. Boom. And there it was. So again, when I'm doing an option, I'm looking for momentum. Momentum. So in a put, you're looking for it to go to the downside, which is what happened here, okay? So if this is something that you want to do for a career, you want to trade, you can do it part-time, you can do it full-time. It's up to you. I have people that are trading with me full-time or part-time, but it's part-time hours. The market's only open for 6.5 hours, and I day trade in the morning. I'm not day trading for 6.5 hours a day. And even when I'm doing options like that PLTR, you put the trade on, you can check it in the morning, you can check it at lunch, you can check it before the close. You can put a limit order to sell it if it hits a certain target, or you get up in the morning, you check it, and you can hold it overnight. One of the biggest advantages of trading options is to hold it overnight, because that's how you get big trades like that with that PLTR. But again, getting back to how do you make it in this business, you have to get good results. You have to have the right tools to be successful. You have to be consistent. You have to have a system to do it. You have to be consistent with your risk. Lots of people are all over the place with their risk. They'll risk $500 in one trade, $100 in another trade, $1,000 on another trade. Your results are going to be all over the place if you do that. You have to be consistent with your risk and your strategy, okay? And again, the danger of people that are wanting to buy pullbacks and just trade the trend is, what if the trend changes? What if the market changes? What if something changes and it doesn't last, and you keep doing the same thing and then it doesn't work, okay? And again, that can always happen. And it won't always give you signs that it's going to happen, even though you think it might. Using certain indicators, it may not, okay? So I developed a system. It's a rating system. It's a very useful tool. This is my strategy. This is my system. I apply it every day. I never skip it. I don't skip it. I don't make it up as I go along. I don't trade on the fly. I look at something. I prepare in the morning, or I prepare at night, but I prefer to get ready in the morning to trade. I think there's more to look at in the morning, and I'm a morning person. And if I get up and I rate the gap, and it meets all my criteria, then I decide to take the gap in the direction of the gap, okay? And again, PLTR was a good example because it was a gap down, and I said, you know what, this is going to continue lower, and that's in fact what it did, okay? And we did another trade in it too, okay? So we did the one trade that was out to the 22nd, and then I did another trade, a different strike. It fell even faster than I thought, though. We did the 160s. So then on 8/19 here, I called the 160s. Stock closed here, gap down. Again, see where it is and where it went. Boom, drop. Again, momentum. In this case here, we just followed it through. So then on the 19th, I did another strike in the PLTR, which sometimes I will do. I'll stack them, different strikes, different dates, to get it down, to take it down into a larger move. This was a little bit more expensive because it already started to go $4.75, but still relatively cheap for the move that the stock can make. Again, when you're trading, if you can get a stock, this is a daily chart, that moves $10, $5, $8, $20 in a day, these are huge moves. Again, whether you have one contract or 10 contracts. Again, what creates the move? Big money, institutional money, buying or selling. In the case here of PLTR, again, it was selling, okay? So this was a huge trade too, 279% return on investment, risking 9,500, made 26.5. If you risk 3 contracts, you could have made 39.75. And again, how much do you need in an account to risk around 1,000 or so? I would say between 5 and 10,000, okay? And you're doing one trade at a time. And again, you get out, and then you have the money in your account from the profit, then you have the money back in your account of the original cost of the trade, and then you wait for the next trade, okay? And again, like I said, you stack it and you take it down. Again, how am I figuring all this out? How do I figure out the direction? I'm looking at the criteria that I developed in my system, which is a 26-point checklist. If the gap rates 20 points or more, I take it in the direction of the gap. If it doesn't, I don't do it. But getting back to what I was saying about shorting, I prefer to short because panic comes in quick. Panic creates selling, okay? And most traders, and again, I don't really know why this is as long as I've traded, most traders actually prefer to go long. Maybe it's because people understand going long, buying low and selling high kind of philosophy. For me, I've always, gravitated towards shorts. The first trade I ever did that I ever made more than $1,000 in with very small size when I first started trading was a short. I realized there was something then to shorting, and a lot of people don't like to short or don't know how to short or don't know what to short, and they really prefer going long. So even in a bullish market, I'm making quite a bit of money shorting because, again, it has nothing to do with the trend. It has to do with the individual stocks, okay? So I'll short a stock in an uptrend, I'll short a stock in a downtrend, I'll short a stock wherever, okay? As long as the gap's good, okay? Because that is what I'm looking for. So I'm trying to determine what's the smart money doing. And again, I use the tools that I have, which is a rating system. I found also a lot of people want to look at, they want to read the earnings, they want to read what's happening. That's all well and good. But if sometimes what happens is, again, you could have great earnings, the stock collapses. So it's not all, like Oracle's out tonight, they could say fabulous, they could hit all the numbers, they could skyrocket, but the stock could collapse or vice versa. So it doesn't always have the reaction you think it's going to have, okay? Remember, I'm not swing trading. I'm not long-term investing. Even the options I'm doing are weekly Friday expiration dates, okay? I might do it out for a week or two, maybe 10 days or whatever. It could be a week or two. But it's based on technical analysis, it's based on the gap, and more importantly, I do the work. So that's part of the process. It's me thinking about it, analyzing it, doing the work. The more work I do in the pre-market before I get ready to trade, the more money I'm going to make on the day, the more prepared I am. Okay? Here's another nice trade that we did that we had back in August. It was another nice short. This was earnings. Okay? We did Walmart. Again, another one that has been affected by the tariffs. So we had Walmart closed here, gap down. Again, what is a gap? A gap is the difference between the close and the open. So at 4 o'clock Eastern time, Walmart closed up here, snug as a bug, 102 and change. Gap down here, opened around 99 something, fell off a cliff. And then it kept falling. Actually, I did a put in this too, and I got out of it a little early. Actually, it continued. But again, we did a day trade in this as well. So you could have done both. You could have shorted it on margin. You could have bought a put, got out. You could have bought the put. You could have held it. Okay? But again, the idea is that it fell and sold off. Oh, here's the day trade we did. So shorted it at 98.45. We did put in this too, though. Got out of it at 97.38. Profit was 32.10. Nice trade. Again, this was the day here. Actually, this was the 22nd day that we did it here. The 22nd. So I know that, people are like, well, how many shares do I take? Well, again, it depends on the size of your account. So again, what is a really, really expensive stock we might short? You're like, well, how much do I need a margin? Tesla. Okay, I do like to trade Tesla. That's on the pricier side. It's over $300. Again, that's a little, but still, overall, most of the stocks we do, I would say, are between maybe $15 and like $150. But we might do the occasional Tesla. Now, if you're like, oh, that's too expensive, it's $300 some a share, then buy the put. Okay, buy the put. You could get a Tesla put for maybe $5-6 or something. That one of the reasons people again like to do options is you don't need a $25,000 margin account requirement, and also you can just pay the cost, and it's theoretically cheaper. I get it. I get that's why people like doing options. But for me, I like the fast, quick day trades. I like the trades like NVIDIA. I can get in, get out, and then I don't have to worry about it bouncing. Now, I tell you, I am in NVIDIA puts, but I didn't get out of it today because I got to hold it. I got to wait. So you might have to wait a little bit longer if you're in options to get the move. What dictates an option play versus a stock to buy? Again, you can do both. Again, there are some people in the room that don't have a margin account, so if I short NVIDIA, they're buying a put, and you can get out where I get out of the day trade. But the fact is you're not going to make as much as if you hold it. So, for example, NVIDIA is a better put, which I'm still in, if it falls and drops and goes to like 165 and change. That's going to have more value than if you had got out of it today anywhere near the low. Do you follow me? So, again, it's they're both good gaps. Again, Walmart's a good gap. You can do both in it. You can do the put and the day trade. I don't always do the same trades though. I will tell you that, because maybe it doesn't have an option, or maybe the option is a monthly option and I don't want to do a monthly. So again, or maybe it doesn't have any volume. Do you know what I mean? So I might do a day trade in a stock that I don't want to do an option in it. Perfectly fine gap, but I don't think it's going to have a big enough move to pay out, okay? Because when I'm doing an option, I'm trying to get a big move, 50% or more. So sometimes some of these, again, it's not like I never do the banks, I do the banks, but banks are, it's just like, this is just a general, I've just found from experience, it's like if I do the bank options, could be calls or puts, it doesn't even matter. I feel like they never really like get going. Like I'll be happy with like 50% in a bank option. I don't know why. It's not like trading Tesla, for example. Again, there are stocks that are so fun to trade as options. Fabulous. Nvidia is one of those. PLTR is one of those. Oracle's going to be too tonight if it's good tomorrow. So again, there's different reasons for different things. It's nothing to do with the gap. If the gap's good, you could do it however you want to do it. But my expectation as far as the payout may change or vary depending on the volume, the price of the stock, or how far out the option is if I even want to do it. Okay? But, I mean, technically, again, you could do it. You could do it and get out where I get out of the day trade if you really don't have a margin account. I mean, you got to work with what you have. You got to work with what you have. It's like everyone said, well, I want to wait to have this much money and this much money and this much money, and I want to do it, but I need this much. Just do it. Learn it. Get the experience. Get the experience under your belt, because that's going to help you. That's going to help you get where you want to be. Because, again, knowing what to do is just invaluable. And if you know what to do, if you have a small account with $2,000 in it, you can grow it to 10 and so on and so forth. And you could have $100,000, and if you don't know what to do, you could lose it all. So learning and understanding what to do is just invaluable. So you take what you have and you learn and you go slow and you grow it from there, and that's the right thing to do. But the fact is, nobody wants to go slow. Everyone wants to get rich yesterday, tomorrow. Everyone's impatient. We live in a very me, yesterday, impatient world. It's gotten, worse since COVID. And social media as well. People see all kinds of things on social media, and they want to believe all kinds of crazy things. Trading isn't gambling. Here's what I say. If it sounds too good to be true, it probably is. Like, taking $500 and making $100,000 in like 3 months or something. I'm not saying it's impossible. Yeah, it's probably impossible. Like, come on. You know what I mean? Now, I'm showing you some good trades in here. That's true. This isn't every trade I take. I mean, that's why I showed you the stats. The stats show you all the losers. So, again, you have to win more than you lose. But, again, my profit is what it is, because sometimes I have big winners. You need those big winners to cover the losers. Do you understand what I'm saying? But the expectation of taking, like, a small amount of money, throwing it in gambling, risking your whole account, and then making, like, 1,000%, you shouldn't be doing that. If you have $5,000 in an account, you can't risk $5,000 in one trade. You can't risk $5,000 in your whole week. You take it step by step by step. You risk 200. You do one contract. Then you bump it up to 300. Then maybe you're doing a little bit more expensive. You gotta take it slow. And as you're going along, you chunk it out. And again, you can trade on margin. If you don't have the 25,000, I don't know, you have to call your broker. You can trade on 2-to-1 margin. There's all kinds of things out there that you have to find out and look into with your broker. But for me, the options, where I really hit it with the options, is when I'm already in the trade. Like, I'm just making this up right now. I don't know if you can see this here if I pull up NVIDIA. Can everybody see NVIDIA? Like, again, I don't know what Oracle does tonight. I'm just going to lay out here a scenario, and then I'll go back to the webinar. I'm just laying out here a scenario. I'm telling you I'm in the 165 NVIDIA puts that expire next week. Like, I'm just laying out the scenario. If Oracle's down tonight, the market's going to be down, and NVIDIA will be down with the market. So NVIDIA could be like at 162, like tomorrow. That'll be a really nice trade for me. Like, I don't know what it'll be worth. It's going to be a good trade. 250, 300%. It'll be worth tomorrow morning. I'll just get out in the open. Like, and that's one scenario. You know what I mean? So you can't force, or it could be under 160, actually. So you can't force the big ones. You can't force it, okay? What if Oracle's up? What if Oracle's up? Market's up. Nvidia's up tomorrow. Guess what? Oracle could be up and sell off. Oracle may not rally. It could gap up. It could have a positive reaction on the earnings. Again, I have no idea what it does, so I can't even rate it. But it could gap up and fail. In which case, then the market would gap up and fail too. So Nvidia would gap up and then continue selling off. And then I ride it out. I ride out the put. There's another scenario. Then I'm not up when I get up in the morning. I ride out the trade. Do you follow what I'm saying? So again, there's so many different scenarios here, but this is just what we did. I like this, but let's get back to what we're doing. Anyways, I find gaps and rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. Again, of what? Of who's in control. Because the control counts. The control matters. I'm trading on the side of institutional money for momentum. Nobody's buying Nvidia today. No big institution is buying Nvidia today. It's not happening. It actually didn't even happen yesterday. Stock rallying yesterday and had a very bearish close. Sold off the day before, which was Friday. So again, why would I be long that stock? And again, this isn't Warren Buffett swing trade long-term Nvidia 5 years from now or any of that nonsense. You're doing a short-term trade, a quick day trade, a 1 week option. Okay, we're trading momentum. You take it, get the move, get out. You take it, get the move, get out. Again, I might go long Oracle. I'm not saying I never go long, but I'm saying most of the trades that I do are shorts, and I prefer to short, and I first try to find the best short. If I can't find a good short, then I look to go long. But again, I'll do the best gap, but I find that shorting actually gives me a niche. And it actually does. So here was the PLTR that we did day trade. This was a day trade here. We did another one here with this guy on the 25th. 154.90 was the end trade. Got out here 153.50. What I'm doing a day trade, I'm looking for $1 or more. So again, $1 is good. Boom. Again, shorted it, got in, got out. Done. Boom. There it was. This was back on the 25th. There's another one I'm watching, you know, with a bunch of other stuff. But anyways, you need a margin account to do this. And again, I think this is medium price point. Now, as I was saying earlier, Fed meeting next week. Again, I appear on TV and I talk about this. If I'm on TV before the meeting, I'm going to say I think that we only have a quarter-point drop. I don't think it's going to be a half. A lot of people think it's going to be a half or more. I think they're crazy to say that. They're saying what they want the Fed to do. But again, there's also a lot of controversy happening right now with Lisa Cook. Trump fired her. She hasn't stepped down. That could go to the Supreme Court. That's not going to happen by next week. So, and again, she's a voting member. So again, lots of drama. Drama creates volatility. Volatility creates opportunity if you know how to trade it. Okay? September could be a really wild month. So again, are you trying to trade the news or fundamentals? You can't. You can't because, again, you could say, well, the Fed should lower rates based on the economic data, but they don't always do what you want, and you can't predict it. Again, unless you're a psychic, which none of us are. So we have to look at the technicals, and that's all we have. But that's actually enough. So for me, I am determining what stock to trade. I get up in the morning, I look for the gap, I'm looking on the daily chart, and I do this in any type of market. It could be a bullish market, it could be a bearish market. It helps me decide what stock I want to short. It can also help you decide when to exit along if you're long something. If you see the gap and you say it's going to fall now, it takes the guesswork out of your trading, which, again, a lot of people are guessing. Like, again, when I go on television, I'm giving my opinion. Other people are on, they're experts, they call themselves. They're giving their opinions. It's just my opinion. Who's right? Well, the one that says the thing before it happens. But again, if you're risking money, you got to get it pretty right. You want to be right a lot. You want to be right more than you're wrong. Otherwise, you're going to lose. Okay? And that's just a fact. But if your risk is all over the place, you could take one good trade, or you could take one bad trade, I should say. And if you have too much risk in the trade that loses, you could have 5 winners and 1 loser, and If the one loser risk is too big, it can wipe out all 5 winners. So you could have a high win ratio. Say, well, I win, 75% of the time or something, and you can still be upside down if your risk is upside down. You see, and so that's another big thing I found for people. They really struggle with their risk. They decide they really love something or whatever. People love certain stocks, and then they risk too much in it, and then that loses. And it's not based on any method or strategy, which is incorrect. I mean, it has to be based on a method or strategy. But again, you must become an expert in something if you want to do this. For me, it's shorting, it's the fast trades, it's trading on the 1-minute chart, and it's looking at gaps and basically predicting directional bias, like the short NVIDIA today. So in order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. The skill can be acquired through education. So trading education is very important. I've found teaching people, I've had the business now, the stock Swoosh for 15 years. People say, well, I took this class and I didn't learn anything, or I took this class and I didn't make any money. I get it. Everybody, no one's born and takes one class and learns how to trade. I didn't either. Okay, I taught myself how to do this. It took 3 years. But you have to take a class to learn something. Otherwise, you develop your own system, which takes far too much money and far too long. And I know this because I lived it. And I would never want to repeat that time in my life. It was tough because I was trading and figuring out the system with real money. And it was very emotionally as well as financially taxing, okay, stressful. So it's still easier to learn from someone else. But what you're going to learn, what strategy you want to do, you have to find something that resonates with you, with your personality, what you think you want to do. Again, I trade fast trades in the room in the morning. I do momentum trading. I like to short. I like to do options, okay? So that's the kind of stuff that you would have to like to do if you wanted to learn from me. But, a lot of times people say, well, I have a lot of education. No, you don't know what to do, or you'd be making money. So again, far too often traders don't understand exactly how important education is. It's okay to ask for help and admit you do not know, or admit that you're losing. The sooner you can come to terms with reality, the better off you're going to be, that you can move forward and say, you know what, I've been doing this thing, it's not working. I'm using these indicators, it's not working. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing, that you need help, the faster you can turn it around. And then you can turn it around quickly, because once you're on the right foot, again, the sky's the limit, and you may take 5 steps forward and 2 steps back, but you're moving forward, and that's important, okay? So again, how do you become successful? You got to be consistent. You need to focus. You think about it. You're like, oh, this totally makes sense. It's a very practical way to think about things. So again, let's talk about what is a gap. A stock gap in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So here's another gap. We did close here, gap down. This was Dell. Actually, Dell gap down today. You could have shorted Dell in here this morning. Had a beautiful sell-off here. Had a $2 move and the drop in the morning. We watched this. We did the NVIDIA, but you could have done Dell today. Dell closed here, gap down, dropped. So this open here, right around 121 and change, fell all the way down here to 118. You could have shorted this today and got in, got out. But this is a gap, okay? So it's trying to determine who's in control. Again, it's the bulls or the bears. Again, Walmart, if you went long Walmart, you lost. That's it. So again, you're like, oh, well, I like to buy pullbacks. No, if you went long this, you lost. It's like, are you still in pain? Are you still in this? I mean, again, it's like you have to look at the direction of what's really happening to make money as an active trader. You have to be in and out of trades in a short period of time. Nobody has endless amounts of money to hold trades that are going against them for weeks and days and months. And the broker is going to give you a margin call too. So again, my strategy is not just gaps, it's golden gaps. So this is what I do and what I teach in my class, which I have once a month. A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You take the trade in the direction of the gap. You do the trade as a day trade or an option. You can do both. I like doing both. I don't do the same trades for every stock symbol, but you could do every day trade as an option if there's an option available. So again, the checklist tells me what to trade and what to look for each day. That's my daily focus. I've been doing nothing else since I started and figured it out. So again, I started trading in 2008. Took me 3 years to figure it out, and I've just never looked back. You know, if I could come up with 126 points so I'd never get anything wrong, that'd be great. But 100% win ratio is not realistic. 95%, that's not realistic. You're going to have trades that lose. So, I mean, you see the money I'm making here at 65%. That's good. That's realistic. You understand? It's like, again, so many people have this idea and they want to trade and they want to make money, but they're totally unrealistic of their expectations of what they're going to get out of it. And then again, people blow up their accounts or they don't stay with something. And again, consistency in what you do, consistency in the risk, very important. All right, let's look at here. This is another one we did. We shorted the market. We shorted the market. We did the 570 puts, expired the 22nd on the 18th. It was a fast trade. This was the 18th here. We did the put. Again, we shorted this. This was actually down the day I did it, and then it fell off a cliff. Boom, boom. So again, 570 was the strike. Could have got out here. Could have got out here. Here was the trade. This was so cheap. $1.70. So it expired on the 22nd. All right. Again, 50 contracts, which was 8,500, sold at 1050. This is a huge trade. 518%. We shorted the market when everyone was going long. When everyone was going long, we shorted it here. This little guy. And it fell. I forget the reason we fell that week. I don't even remember anymore. Then we did, again, if you had a smaller risk, if you did 6 contracts, could have risked 1,020, could have made 5,280. And again, it's all about momentum, momentum, momentum. Is institutional money buying, selling? Again, if you get in before the momentum occurs, like again, you would have had to hold that Q trade overnight. You would have been down in the trade. You would have had plenty of time, but you would have been down into 4, and then it fell off a cliff, okay? Again, that's why you have to be patient. You have to consider your risk. But I'm predicting the institutional money is going to do something. Again, I'm mostly short. But the benefit is you can win big trading on this side of the power, because that's what's going to move something like the market like this, where you can pay $1 something for something and then get out at 10 something. Like again, because why? You know, again, it's sold off, and a lot of people are long. So you know, again. This is not an earnings trade, but like with Oracle tonight, like I have no idea what Oracle's going to do. And I'm sure the options are pricey going into the earnings. So I typically don't take an option into the earnings because I don't know what it's going to do. Nobody knows. Okay, we don't have insider information. But again, something like that with the market, we do the market ETFs. And again, it's nothing to do with the trend. Market's in an uptrend. I get it. The market's in an uptrend, but it's nothing to do with that. Okay. I don't have any typical size. Dave is saying, what's typical size? I could do any size. I could do a baby gap. I could do a big gap. It's nothing to do with anything. It's not about percentages, if that's what you're asking me. So again, too many people are all over the place. They have no system. They're just doing different things all the time. They're going long and short the market the same day or the same stock. They don't have any focus. I'm very, 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 very focused. I'm doing gaps. I'm looking for momentum, okay? And then whether you have a small size or a large size, it doesn't matter as long as you're doing the same thing consistently, which again for me is the rating system. This helps me determine who's in control, the bulls or the bears. Again, if the bears are in control, you got to be short. It's the only way you're going to make money. If the bulls are in control, you got to be long. And again, this has nothing to do with the trend. We're looking for the flow of money in momentum. This is just, if you've never traded momentum before, once you start to trade it and you see the profits you can make when you're on the right side of momentum, it's so fun. Again, whether you're doing options or day trades, it doesn't matter. Again, if you're in something trying to get a 10 cents move or scalp something for a 5 cents move or a 15 cents move, that would drive me nuts. Okay, I don't even have the patience for that. I want a big move, okay? Power money, that's what's moving the stock. Again, I only trade when the gaps rate good. I'm chunking it out every day in the room, the fast trades. I'm trying to do the short-term options, but it's really, I don't want to sit for 6.5 hours a day. It's about working smarter, not harder. And it's really difficult also to do far too many systems. all these indicators and everything, everybody's like, it could give you a headache just looking at some charts. Like, they have too much stuff on them. So I just focus on gaps. That's it. And once you understand how meaningful they are, particularly in relationship to the overall chart of looking at predicting the direction, you'll say, oh my God. And again, my eye goes right to the gaps, right to gaps now. That's how I read charts, okay? The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That's how you know when the power money will flow to pay you. So again, for me, shorting has become a niche because a lot of day traders don't know how to short or don't want to short, but you're missing out. You're missing out if you're not shorting, is what I'm saying. And then when the sell-off comes in, you don't know what to do. Or you go long and you lose. And you can lose everything very quickly to the downside. But you can also make money very quickly to the downside, which is why I've just gotten really good at it. But consistency is extremely important. So if you decide you want to take my class, you'll learn how, what, and when, how to make money in the market trading gaps, what stocks to trade. You learn the rating system and to trade in the morning very quickly. I'm looking for stocks that have a high probability of directional bias for the whole day, a big move in the day, early confirmation between 9:30 and 10, which we got in NVIDIA, and the PLTR, and precise entries with follow through and a good risk to reward. Again, 100% in return on investment is a good. 1 to 1 is good in a day trade. If I get more, you say, well, how do you get more then? Because it goes unplanned. It happens unplanned. You're in it already and it gaps in your direction overnight, which, like I said, could play out with NVIDIA. But I gave you 2 scenarios where it could play out in my direction of what could happen with the market and Oracle. So again, take what money you have, set it up, create an account for yourself and say, okay, I have this much money and I'm going to trade with this much risk for between now and the end of earnings season. Then I'm going to bump it up. And that's how you get somewhere, because you have to be consistent with what you're doing. So I get up every morning, I rate the gap. If you come and want to take my class, this is what you're going to learn. You're going to learn the entries, the exits, the targets, and the rating system. And you'll understand why. How did I know PLTR was going to fall off a cliff? How did I know the market would do that? Was right off the highs. How did I know that NVIDIA was going to fall today? People, as much as I say, well, I don't really need a class to understand it. Yeah, you're going to do better. You're going to make more money if you understand why. And don't try to pretend you don't want to know why. You want to know why. As human beings, we're curious. We want to know why the Fed's going to lower rates, whatever they decide next week. We want to know why this thing, that thing, the other thing. We want to know. We're curious, okay? Any questions here so far? Anyways, your dreams are possible. You've got to be realistic and grounded so you can attain them. Again, so many people want to do this. They have the dream. They want to be a successful trader, but they're not realistic in how to go about it. Then you're going to just beat your head onto the wall. You can do it. You absolutely can. I have people trading with me a long time, and they're doing well. But you have to be realistic about how much money you have, how long it's going to take you to figure it out and get there and understand it. But I'm here to answer questions for you. So empower yourself today. You can do it. The Golden Gap course is a complete system to use to trade. I teach the class once a month. So we're into September. The September class is coming up in 2 weeks. And this is a class you'd want to do if you want to trade during earnings season. But you can start trading with me right now, even before the class. Some people have. So this is a full course on how to strategically find pick and play stocks that are professional bearish gaps. Class is September 20th and 21st, beginning in fall. And the class tuition is $69.99. Class is online. You can be anywhere in the world and take it. And this week is my birthday, so I'm doing a birthday special for the combo. Sign up for the combo, which gets you the Golden Gap course, the Trends class. It's $79.99. The class is online, and the birthday special is you will get the newsletter through the end of next year. That's a huge amount of time. It's 16 months of the newsletter, trading room, and market report subscription through the end of next year, 2026. That's crazy. Special ends this Friday, September 12th to 25th. If you're interested, you could sign up. You could sign up today, start trading tomorrow, get the Oracle, whatever we do with it, and then the class is not this weekend, but the following weekend, the 20th and the 21st. If you're interested, email me at melissa@thestockswoosh.com. It sounds like gap analysis, pre-market analysis is key to your teaching. Again, you could do it at night. You could do it at night if you want to. Some people are on the West Coast, they look at gaps at night. You could look at gaps in the morning, okay? But again, yes, you have to do the pre-work. Yes, you have to do the analysis. And again, all of that is very, very important. Let's just look at everything here quickly. I have 2 minutes. Any questions from anybody at all? So the market's lifting here today, gapped up today, fell, dropped, trying to go somewhere, but I don't think we're really going to go anywhere here today because the market's really waiting for Oracle. So again, it's 2 o'clock. Oracle's out after 4. You can watch it if you want. I have no idea what it does. I'm not in the stock. So I'm in some positions here. We'll see if they move with Oracle tonight or tomorrow. But again, Oracle's considered a market stock. So if Oracle gaps up, the market could be up tomorrow morning. It doesn't mean it's going to rally. It could fail. Again, we had a huge sell-off Friday in the SPY in a gap up to brand new all-time highs. Market fell. So again, you can't always short gap downs. You can't always short gap ups, and so on and so forth. A lot of people trade gaps. They say, well, gaps always fill. That's not true. That is totally, totally false. It is not how it works. If it was that easy, we'd just do the opposite of everything. We never lose. That's not realistic either. You do have to use your brain. You do have to think about what you're doing. You have to think about your risk. You have to think about your picks. And I find it's just so much easier, again, if you're just doing one thing at a time or 2 things at a time. Because then you can hone it down. And again, then you can build on the size too. But you're only focusing on one thing at a time. It's just less stressful. And again, you'll have less losses if you're in one thing at a time. Any questions from anybody before I'm done? Here's my email, if you want to email me. Thanks so much for having me, everyone. If you're interested, email me at melissa@thestockswoosh.com. Have a wonderful, wonderful, wonderful afternoon. And you can watch Oracle in the night.